session. And you may or may not know, but we have another 2 sessions scheduled, one in May and one in June, and that will then conclude our 2024 Get Ahead course. And of course, specifically when you see and hear me, that is on the auditing topic. So there are also a few more accounting and drafting sessions, and towards the end of today's session, I will also show you those sessions. But then first of all, from my side, Johanna Skreeder, welcome to today's session. I hope you are as excited about the topics and about attending today's session as I am. So let's just have a look first today. We said we're going to look at journal entries. And remember, I am bearing in mind that most of you are probably first year. So I'm not going to throw the most difficult things at you, but we are going to just look at a few principles and a few examples, because every single auditing section, okay, bar a few, but the majority of the auditing sections do have journal entries, and we need to know how to audit those journal entries. Next up then is related parties, and we're going to again look at the principles, look at an example working paper, so that when you come across them, because almost all of us are going to come across them one or other time, you will know how to treat those. And we will then at the end have a look at other income, consider what other income could be, and again think about the principles there. Right, so before we jump into this session, just firstly, again, a reminder that all attendees are muted. However, if you have a desperate question and you would prefer to rather ask it, we can unmute you. But for now, just to make sure that nobody has any accident, you should be able to hear me without accidentally unmuting yourself and then us hearing what you might be saying to your colleague. Right, I did see one person is saying they are having trouble with sound, so I don't know, maybe we should just have a quick look. I don't see hundreds. Normally, if there really is a problem from our side, I have a big problem with sound. There's about 10 queries coming in. I only have one. So maybe just, can you guys just raise your hand for me? Let me just move forward. I'll come back to the slide, but on your dashboard, you will see there is a little raising your hand function. Can you just press that for me so that I can just see how many of you are able to hear me? I see Yamkela. Thank you, Yamkela. Anybody else? Are you guys able to hear me clearly? I see the slide has mostly been moved across. Let me just see. Okay, I do see other people also raising their hands. So thank you very much for that then. I'm going to then assume that there is better sound for now. But I do also trust Ms. Silu will also look after those that are having trouble. Okay, let's move back to that slide. So we've got a chat question function. I will show that to you just now. If your signal is lost, please go out of the webinar, close it, and enter again. And then that should sometimes also help you. What I've also found, especially because we are sending both a video and a audio as well, it is sometimes difficult when I'm moving the screen across a lot for you not to hear too much. So it's almost like the visual is sent first. What you can do in those cases is you can try and close off your Outlook or your internet or any of the, like your web browser, anything like that that's also using data. That could possibly help. And then also you have the choice to either attend the webinar through the browser or through the app. The app seems to be more stable. So if you can, then rather do it on the app. That will also be helpful. The recording we are recording today's session, and the recording will be made available. Not necessarily today, but I'd say within the next week or two, you'll get an email about the recording that is available, and all of the other recordings from our previous 5 auditing sections, as well as all the other sessions for the caseware, accounting, etc., are all available. Right. Then I really want to encourage you to participate. Today I am also going to ask a few questions here and there where you can then participate. And so there I want you to please then use the dashboard with the question chat block. And you can just enter a question there where that gray part is that says enter a question for staff. If you want to participate in the discussions, you're welcome to enter something in there. It will pop up on my one screen where I will be able to see and read your participation. If you are having any technical difficulties, we have Masilu from our consulting department, and Masilu will then help you to get any of your technical matters addressed, or maybe even some of the more, let's call them generic questions, Masilu will also answer for us. Right, so thank you in advance already for Masilu, helping us out quite drastically there. All right, the first question I have for you today will be a poll, and I want to see whether you have downloaded today's material yet. And we will be sharing the link again soon now as well, but just for now, please will you complete the poll just to indicate to me whether you have downloaded today's material. If you have downloaded the material, then you can just select yes. If it is not yet, you're welcome to do that as well. I have shared the link earlier, but I'm going to share it again. I see Shana is also asking for the link again, so we will be sharing it. So to get this link, you must go to that, what is the word now? To the dashboard of that screen that I showed you just now, where that chat function is. You will see it there, but I am going to just share it with everyone again. Let me make sure I'm sharing it with all attendees. Right, that's gone through there. Let me also just close the poll then. Good. I'm going to also then show you, if you do follow that link that I've just shared with you, it will take you to this web page. Now, this may already look familiar to you because you probably have seen it before. What we have started to do also in these later sessions, so that you don't download everything every single time, we have actually then made it possible for you to just download session 6. Just make sure for our side, you're going to download the Probe Audit, not Audit International. The Audit International session is running in parallel to us on another site. So you will download the session 6 Probe, and that will then have today's Caseware file with working papers included in there, as well as the supporting documentation and a PDF version of today's slides. All right, so you can download that from there and then be on your merry way for us to continue. All right, so that's the first thing. While you do that, so while we are waiting for that to download, I just want to see, we've got so many people attending today. I'm really excited that all of you are joining us. And so while we are having a look at that, and letting people attend, or rather letting people download the material, please let me know, have you attended all of our previous sessions? Have you attended at least 3? You know, sometimes something actually just creeps up and you can't actually attend all of them and you catch up another one. So whether you've listened to the recording, whether you've watched the one live, any of those, I'm just curious to know whether you have attended some of our previous ones. I see a few people that are saying this is their first one, or they've done a 1 or 2 before. That's fantastic. I want to say everybody is still exceptionally welcome, and especially today's one. Yes, we are assuming some of the previous knowledge, but I really do think that you can still hit the ground running with us today. And then even if you want to then go and watch the recordings afterwards. Right. Okay, I see only about 44% of people have voted, 45%. So please, if you haven't participated yet, please let us know how many of these sessions you have attended. So about 50% have voted. Right, I'm going to give us another few seconds to get to 60%. If you haven't yet voted and you still want to, and your download is running in the background, please let us know what your scenario is. Have you attended all of the previous sessions, only a few, or is this perhaps your first one? Good, I'm going to close in 3, 2, 1. Good. Right, so just in case you are curious to know who your colleagues are, who of you are attending, there you can see that about 55% of our delegates today in attendance have attended all of the previous sessions. Many have attended 3 or more, and then a few have attended here and there. And then we even have a few people who are attending for the first time. So a special welcome to the person or persons attending for the first time today. Right, so let's move on then to, now I just need to unshare that slide. Great stuff. Good. So I'm assuming that most of you are managing to download your material. If not, just send a pop-up or send a question to Masilu, and he will then help us with that. And then in the meantime, we're going to jump into our case study. All right. You can see I'm busy on a number of different screens. I've actually set up 3 screens for me today, just because I struggle to see everything on just 2 screens. That's quite sad, eh? We used to be quite spoiled on 2 screens. Now we need a 3rd one, but that is what it is. Right, so I'm just going to switch off the camera so that you don't get confused or distracted by myself going all over the place. So let's have a look then. Oh, I see there a question about someone that doesn't have the SOUP user. It is also possible that your firm has deleted the SOUP user. So you may have a partner's login or a login as partner. So that's just the letters PP, Oscar. Otherwise, Masilu, I will just leave it to you to just have a look at that. There are a few standard users in that Caseware file, but it is possible that your firm may have locked the SOUP user, which actually is a good thing. All right, so who is our client today? Wrap Up Manufacturing, as we have been busy all this time. So we are busy with Wrap Up Manufacturing. As a reminder, their financial year end is 30 April 2023. It obviously can't be 2024 because we're still heading that way. We are auditing this client with a 30 April year end in 2023. The client's financial reporting framework is IFRS for SMEs, and the accountant that we deal with from time to time is called Andy Crack. And you may remember that in many of the cases we don't deal with, or we don't actually have a direct interaction with Andy Crack, but I would rather just show you some information that he has sent us, or you might see an email, etc. Right, but that is if we do see stuff about Andy Crack, he is our accountant, or the client's accountant rather. Good. Let's get started then on journal entries. So how do we audit journal entries? Now, before we just jump into the auditing work, let's have a look at our process flow again. Remember, we are auditing the financial statements, and we are having to conclude whether the financial statements are free of material misstatement. The financial statements are prepared using the trial balance, right, which is obviously just a summary of what's in the general ledger, but also other information. So this could obviously be subledgers, but it could also be a variety of other documents that can help us in this regard. So the general ledger is then made up of, in this case, journal entries that are entered into the general ledger. So we are having to audit those journals. Now, where do they come from? Well, they always need something as support or as evidence. And so that's why we will go and still look at some source documents. Now, again, a source document, when we were auditing, let's say, expenses earlier, we would go and look at a supplier invoice. When we were auditing payroll earlier, we went to go and look at the staff records and at the payroll register. So for journal entries also, there must be source documents to support any and all of the journal entries that are processed in the client's general ledger and therefore ultimately lands up in the financial statements. And the actions that were taken that led to these journal entries, well, those could be a variety of things. Remember that these would likely not be a sales transaction because you've got your sales records and process for that. So your sales invoices would not normally come in to your general ledger with a journal entry. These would rather be, I want to call them ad hoc items, or then maybe items that are not part of our normal classes of transactions. It could also be things such as, for example, the leave pay. We might remember that we had a provision for leave pay. So that is rather something that we cannot go and record in the payroll system. It doesn't go through the debtors ledger or anything like that you would normally expect. So how do we record the provision for the annual leave pay, or for that matter, perhaps even the provision for bonuses, things like that? Well, the action that took place was we hired an employee. And as part of that employee's, here's the source document, employer records, and the legislation in South Africa, he or she accumulates leave, annual leave, of 15 days a year. And so this is the action, the document is the contract, and from those as supporting documents, we then need to see whether and that the client has correctly accrued the provision for leave pay for employees. All right. You should not see any journal entries in the accounting record without firstly any justification. Okay, we don't just process random journal entries in the accounting records. And secondly, without any supporting evidence. All right, so that follows the same process flow, even if it is something almost what I say as random or as quite different to a normal class of transaction or account balance being journal entries. As a reminder, again, whenever the client is processing any of these journal entries, we are still busy with our little triangle between the financial statements, the accounting framework, and the audit. So in the financial statements, we are issuing an audit opinion on those financial statements, which in the case of wrap-up manufacturing is prepared in terms of IFRS 4C. That's the overall, the financial reporting framework. When they are doing the accounting work, in this case, when they are processing the journal entries to get the accounting records correctly done, then the client has to process those journal entries in terms of the accounting policies. So only when IFRS 4C actually allows for it. So when we are auditing the journal entries, we mustn't forget that we also need to ask ourselves whether the journal entries are still achieving or meeting the requirements of the accounting financial reporting framework, in our case being IFRS 4SMEs. Now, why is there such a focus on journal entries? You may have seen that many of the audit programs, by far the majority of them, have procedures about journal entries. It's even got its own little heading called journal entries. So why this focus? Well, there is a major focus from the fraud auditing standard, so ISO 240 that you see on the left-hand side of the slide. The fraud standard places a lot of emphasis on journal entries, and the reason really being that when you are performing, or rather committing fraud, then there's basically one of two ways of committing fraud. One being stealing stuff, actual items. And those are often the smaller type in terms of volume items or in terms of size, but high value items. Now, those, you need to have opportunities in the sense of these things not being too closely monitored, looked after, protected, etc. And also, well, if you steal those things, you need to go and be able to go and sell them somewhere before it's actually going to be of any value to you. But in a managerial position, you are in a position to be able to manipulate bigger or smaller opportunity, to manipulate the accounting records and prepare fraudulent financial statements simply by overriding controls that would otherwise not be possible for the normal accountant. In our case, Andy Crack, he won't be able to commit fraud, or he might not have any justification to commit the fraud. But if one of the directors comes and says, Andy, I want you to process this journal or that journal, because you know what, if I do my processing every month and it looked fine, but now that we get to the financial year end and we see, oh my goodness, we're not meeting our targets, or this or that is going to actually go wrong. Well, the only way we can really make this look prettier, and I'm intentionally not using the words fix it because it is what it is, but the only way in which we can make it look prettier is really to, well, manipulate the accounting records, and that is then through the journal entries. So there is a lot of focus from the auditing side to try and make sure that a client does not manipulate the accounting records through the use of journal entries. Right, so ISO 240, the standard on fraud, says that every single client will have this presumed or assumed risk, every single client. And so therefore, in every single audit, we must audit to make sure management does not manipulate the accounting records. And probably one of the most important, one of the biggest, most obvious testing that we do perform is then on your slide, paragraph 33, that says the 33A test the appropriateness of journal entries that have been recorded. And then important, especially in preparation for the financial statements. As we said, sometimes that is the space where the client wants to override it. And they're then making inquiries of individuals involved in the financial reporting about inappropriate and unusual activity that has been done around the processing of journal entries, selecting journal entries and other adjustments made at the end of the reporting period, and consider the need to even test other journal entries throughout the period. Because you can imagine if the client starts to get clever and they know that you're going to test the journal entries around year end, they might say, well, you know what, the one year we tried to manipulate these figures in period 12 didn't work because the auditor looked at all the financials, all the journal entries and towards the end of the year. So this time, let's do some journal entries in month 11 or every month or something like that. So you might, depending on the risk, even consider testing more. All right, so let me just move on. The application in probe then for us here is that management override risk is already populated in our planning documents. Here on the slide, you can see 11, 22, and 5 for you to reference or refer to later on, but I will show that to you. So that's already documented. What we must also look at is that the auditors or the team, as part of doing your planning, so we're not going to do that today because we assume the senior or the manager has already done the planning. But as part of planning, we also need to consider and find out if there are any controls over the process of recording journal entries. And then, of course, go through the whole process of testing controls over journal entries. There are 3 steps there. Firstly, asking if there are any controls. And as part of if there are any controls, considering the design thereof. And if we're considering design, we ask ourselves, well, is it going to actually address the risk of manipulation in this case? So if the controls are operating the way that it looks like they've been operating, will those controls prevent material misstatement, or otherwise will those controls detect them, pick them up, and also fix them? So that's in terms of ISO 315, one of the requirements. Then all material journal entries are tested. And that is because in probe, the methodology says we test all material items. So from that, all journal entries with a material value, in our case, more than the specific materiality then, in terms of the probe methodology, will be selected for testing. Right. If I just go back to that paragraph from the auditing standards, 33A1, make inquiries about the financial reporting process, inappropriate, unusual activity relating to it, selecting journal entries and other adjustments, and then consider the need to test other entries. So end of the reporting period. So in the probe, the methodology, the procedure rather is going to say all material year-end adjustments, all significant year-end adjustments. Now, significant could also be individually significant, which in the probe methodology is basically 25% of your materiality, but that is not just a monetary amount. It could also be, I want to use the word unusual now because that's also what's in the word program, but it's actually something that requires or that has significant other reasons. You know, it's really, it's a funny one, or it is an important journal entry, not because of the amount, but it is significant. I almost want to say qualitatively significant because of the reason for the journal or the type of journal that was processed. Imagine a journal, something like, let's say, debit creditors, but credit revenue. Okay? Creditors, as in accounts payable, and revenue, sales, they don't really have a journal that's going to link the two of them. Why is that the case? It's reducing the accounts payable and increasing the revenue. That doesn't really make sense. So even if it's not a material journal entry, one would probably still go and have a look at that one. And the example that I gave now about the creditors and the revenue, that is something that a colleague of mine came across as part of her fraud and journal entry testing one year, where there was, well, obviously collusion, because those are different registers or different reports and sections that is being tested in. But the couple was actually married, and the one person was working in the trade payable section, the other person was working with sales, and the two of them actually then colluded and, well, stole a lot of money through obviously the payments of creditors, but then they had to reduce the amount of creditors on the system, and they did that through simply basically transferring those creditors amounts to revenue through journal entries. Right, so anything like that, big or small amount then, but that is really just weird, unusual, not what you would expect. Those ones, specifically around the year end, we will test year end adjustments, and then going and considering if we need to do more. So I'm not saying only year end. You can definitely consider if it's necessary to do more during the rest of the year, but definitely around period end. Then also you need to make an inquiry about the journal activity that is performed in section 1610. We will go and have a look at that work program as well. And then just the last thought, not that it's not important, but just as an end, remember the client may have already processed some journal entries before they gave you the trial balance and the lead schedule. But then as part of your audit process, it is possible that you are still going to come across some of the procedures, some of the journal entries, either because the client comes to you and says, I'm sorry to give you this late journal. I know you've already started with the audit and imported your trial balance, but I realized this, or I only did the depreciation or the deferred tax or whatever it is. I only did this procedure, this calculation towards the end after I've already given you the trial balance. And please, will you process this journal entry in your audit file so that we still have the same trial balance, or our trial balances still show the same balances. So that's a journal entry that was literally done as part of your preparing for the financial statements, but it was done after you imported the trial balance. So you're probably going to physically record that journal entry in your Caseware file, but then remember that that's also one that needs to be tested. But then even more important to remember is if you have audited a section and you came across an error yourself as part of your auditing process, remember to include that one. If it is a material, a significant or unusual item, remember to include that as part of your, let's call it your fraud considerations. So don't just go and process it and say, yes, the client was happy to record it and move along swiftly, but also consider it or include it as part of your considerations for whether there is indication of fraud, or then basically management manipulating the accounting records through those errors. What do I mean by that? Well, it could be that the client is accounting for stuff that shouldn't be accounting for, and then hoping you don't pick it up as part of your audit. And then every time you come to the error or come across the error and you say to the client, oh, here's a mistake, and every time the client's just happy for you to fix it. Well, you know, if you add all of them together, maybe at some point that could actually be indicating that management has processed stuff that they shouldn't have, whether it was through journal entries or whether it was through another way, and you are now fixing those in the accounting records through journal entries. Well, those also should be considered for whether management had actually overridden controls. Okay. Also, in terms of how they approve those journal entries, it's quite possible that they well, not quite possible, but I mean, we need to be aware of the process that management has to go through in approving those, let's call them audit journal entries. And if that process is not done, well, then again, there's an override of the controls. All right, some things to remember. Journal entries should be tested to supporting documents. I've said it before, I'm going to say it again. There should not be any journal entry without a justification for the journal and without supporting documentation. Some of your clients might have, I almost want to call them fancy, but let's call them sophisticated systems, whereby they will actually have a file, and like call it a journal pack, where they actually keep everything related, all the supporting documents related to a journal entry process together. They might have a journal register where they write in every journal entry that they've done and someone signs off on it or things like that. So there's a variety of ways in which clients can actually keep the supporting documentation, the authorization, etc. of that. Again, that can be in a manual way or electronically, but there should be something to support it. In smaller clients that are very informal, you may not have that, but it might just be a matter of only this specific person can actually record the journal entries in the accounting system, for example. So variety of complexity that they can take on at the client, but it is important that you don't just see a journal, ask the client about it, they give you a reason or an explanation, and you are just happy with the explanation. You have to go and test it, go and corroborate it to supporting documents. Right, then calculations to get to a journal should also be tested. You can't just accept the amount as being correct. So what do I mean by that? Well, let's say there's a calculation for, let's say, the provision for annual leave, or maybe something else that you're not going to come across too much this year, but maybe in later years, is if the client sells items and they also have a warranty. So if a specific document, a specific item of inventory breaks within a year or 6 months, or whatever the period may be, maybe 5 years, if it breaks, then the client can bring it back to me. And if I can see that it was due not because of their abuse, then I will replace it for them or fix it for them or something like that. Now that replacement or fixing is going to cost me money in my business. So I will then probably make a calculation to say this is the amount of sales for the year. And traditionally, historically, I go and look and I see, well, the returns that we normally had on items in a year is about, I don't know, 0.5% of sales, 1%, 2%, whatever the percentage of sales are. So when I then go and calculate the provision for warranty, I will go and simply do quite a simple calculation. Take the sales value for the year, multiply it by that percentage, which we believe to be an appropriate percentage, then to calculate what is the most likely warranty expense that we can incur to actually settle or honor these warranties. And that will be the way that I calculate the provision for warranty. Great, but as the auditors, we cannot just come and say, oh, there's an amount. I need to actually check the calculation thereof, the mathematical accuracy. So remember to also check the calculations, test them. Don't just accept that they would be right. Even we're going to see later on where there's a split in an amount between the VAT inclusive, or rather the VAT exclusive part, and the VAT itself. Even that needs to be tested. Okay. Then journal entries in Caseware are journals passed in the closing process. I've mentioned that earlier as well. We need to reference to where they are tested and concluded on. There are 2 sides to every journal entry. And if you ever reference to the testing in the other section, so let's say, for example, the provision for warranties or the provision for leave pay, there are so many examples. But I need to make sure that if I assume this provision was tested for in the, let's say, the inventory side or the provision side, the payable side, any other side, I can't just assume and say, oh, you know what, normally this is done on that side. I'm just going to say C section so and so. No, I've got to check in, I've got to talk to my teammates and make sure that they have done the work. In fact, you will see that we actually reference it to the work program, or the working paper rather, or to the lead schedule. We don't just say, oh, it was done in the whatever section. You need to confirm, speak to your teammates, check the working paper reference, and then reference it there. When we audit the journals, we need to look at it holistically. So we don't just say, okay, is the amount right and this and that? And was the right account debited and credited? We do that as well. But we also need to ask ourselves, what was the purpose of processing this journal entry? Did it achieve this purpose, and does it actually make sense? Sometimes I ask myself, why was this done through a journal entry and not through the sales ledger or some other ledger? what documents support this entry, and are those documents appropriate? Can I see them, and so forth? And then, are these accounts correctly mapped in the trial balance? Because it's quite possible that the accounts might look right for us, but if we then go and have a look at the account number, where it was mapped, we might have thought this thing goes to an expense, but actually it goes to an asset or something like that. So we need to be very careful in auditing that as well. Right, then next up, sometimes monthly journals are raised and reversed. Let's say, for example, for management accounts, I might process the, let's say, provision for bad debt. Every month, I record a journal entry provision for bad debt, but then next month, I reverse that journal entry and issue or process a new journal entry. Again, for provision for the debtors outstanding at that month. And so if these are completely reversed, they ultimately don't have any effect on the financial statements at year end. They are really just there to get the management accounts to look more reasonable, more realistic. So those don't have any effect on the financials, and so we can basically then ignore them. We don't have to test them. Of course, you are likely to have that one monthly journal at the end of the financial year, 30 April, and you will then test that journal entry. But the ones that are put through at the end of May, June, July, all the way through to even the end of March, they don't affect the financial statements if they are completely reversed, and I will therefore only really focus on the one for end of April. Some journals are then passed monthly, but we test the balance as a whole at the end of the year. The example we've got there is the accrual for bonuses. We have that in our working paper as well, where we see how the client basically accrues the complete bonus by processing a journal every single month. Then we just test the whole provision at the end of the month, and we don't worry too much about the individual little monthly journal entries that were put through. Good. And then if we do get a journal listing to test from, so in other words, the one option is to actually go and select all the journal entries from the general ledger. We have already confirmed the general ledger is complete. We know that that is representing the trial balance and the client's accounting records. So if we select from there, we already know it is complete and accurate. But if we are selecting journal entries from a basically like an export or a separate report from the client's accounting system that is called a journal listing with just all the journals, then we need to consider how we know that it is complete, all the journal entries are on there, and it is accurate. It is showing the correct journal entries or the correct amounts, or it is correctly showing debits and credits and all those things. So then we need to also remember paragraph either 500 paragraph 9, which we've addressed on every working paper so far, to say how have we established the completeness and the accuracy of the work or of the information on this document prepared by the client. All right. Then in the work program, the audit steps that we would see and that we are going to do on our work paper today, this one now refers to operating expenses, okay? But I don't want you to get a fear or fright or think what the heck is here. So here you can see operating expenses. Now that is really just because the screenshot that we took of this procedure comes from the work program for journal entries. So this is pretty much the standard procedure or work program procedure that you will see in every single work program. Only, of course, if we are in the revenue section, the work program procedures will refer to non-standard journal entries relating to revenue and go and do ABC or whatever the section is. So that is then amended according to the section where you are working that work program. All right, so the rest is pretty standard. It's just that this one now refers to operating expenses. So what do? We identify, as we said before, material, so exceeding our specific materiality for the section, significant and unusual journal entries or year-end adjustments, and other non-standard journal entries. In other words, if I process certain things every single month, I don't include that as part of my journal entry testing. If they adjust the inventory, let's say, for example, every month on the 24th of the month, there's a journal process that's sometimes even automated and automatically updating the inventory and the cost of sales because of the movement of the stock, or something like that. We're not to worry about those ones. We will consider them, but any other non-standard journal entry, those ones will also be included. All right, so this will be done in your working paper section, as we said, in this case, operating expenses. For today's exercise, we will be looking at one working paper with a few examples of different types of journal entries. It's really just to get the, I almost want to say, the point or the principle across for today's session. But what you would normally expect to see in your file is a section working paper in each section where they document the testing performed on that section's journal entries. All right, so what steps are we going to do? I just want to say to or with those, for those journal entries that we have selected. We will firstly confirm the rationale for the journal entry. Does it make sense that they've processed this journal entry? Examine then the supporting evidence. And lastly, then review the accounting entries to confirm that the transactions will be recognized and measured in accordance with the financial reporting framework. And in this one, IFRS for SMEs. All right. Good. So we are now at the point where we can then go and have a look at our exercise. And in terms of our exercise, we will have a look for journal entries for testing that's been identified and already extracted from the general ledger. You can expect to do a lot more testing than what we've just done, selected for today, but we will have a look at these ones. Okay, and then we're going to test the journal entries to supporting documents. Good, so let's go and have a look at that. I'm going to open my Caseware file. If you have the Caseware file open, you can have a look at it already. If you were, I saw one or two people who were struggling to log in. I think it was maybe just Oscar that I saw, but if there are others of you struggling, you are most welcome to also just open one of the previous sections if you can log into those ones. Sometimes it's just a matter of your license that just needs to be fixed or something like that. So don't worry about that. If you can follow in any of the other Caseware files, you will still have the same work programs. I just can't remember if your Excel worksheets are going to be in there. But you should still be able to follow, of course, from the screen at least. Good. So we mentioned earlier that we spoke about section 1125 and where we are going to document, or where the methodology is already documented the responses. So in the audit file, I've moved down to engagement working papers, pre-engagement planning and risk assessment, and in there is 1125. Now, if you've never seen these documents before, don't worry. These are the ones that are used in planning the audit, so I wouldn't have expected you to necessarily have seen them before, and I also wouldn't necessarily expect you to be completing these ones at this stage. So what I would expect is that if there is anything recorded in these documents, that you are at least alerted to them, and that's then probably what happens at your planning meeting. So I'm going to open 1125. Mine opens up very quickly because I've already opened them before. So it just goes there, but if yours takes a while, don't worry. You can just have a look at your, like Helen always says, one of our colleagues, the mesmerizing blue circle, and it will open up soon enough. All right. Then what you will see in your document map on the left-hand side, there are different sections to this document. I want you to please scroll to identified risks so that you see the risk identified in this document called fraud risk assessment. All right, now this would normally be where your senior or the manager or someone is going to record the risks for, in our case now, the fraud risks identified at financial statement level. But even if they have not done anything yet, this specific risk, management override of controls, will already be included in your, let's call it, blank template. All right, so it is already recorded, and one of the ways in which you can see it is because of your source that has the reference to ISO 240, which is the fraud standard. What is also already in here is the ROM considerations, but please, of course, the team is encouraged to amend that as is applicable to your client. And then your team, your senior or manager would have assessed the risk of material misstatement. In the case of our client today, we had assessed it as a high risk, and fraud risks are always significant risks. So because it is a fraud risk, it is a significant risk. And the auditing standard says any significant risk requires what is referred to as special audit considerations. I just always think about it, I have to specifically respond to this risk. And in the probe methodology, we have a separate little category for that because it is quite important. Okay, so what we have done or already decided here is that for this risk that every auditor shall always consider, the way in which we are going to respond to this fraud risk for this client, Wrap-Up Manufacturing, is by saying, well, we are going to have experienced staff and in some cases even those with specialized skills where they are necessary. We're not just going to have a team of inexperienced members. Yes, of course, maybe some of our team members may be less experienced, but they will be, and that's the second one, there will be a lot of supervision or sufficient supervision and review of the work done, more than just necessarily just more, but also the nature of the review and direction, the timing, the extent being then the more. So we are going to address how we supervise and review the work, give direction to team members, but also having more experienced staff. Another option is unpredictability in selecting some procedures. Generally, we're talking firm-wide, at least audit-wide selection, and evaluating the selection and application of accounting policies. So how does the client select those? All right, those ones may not necessarily have made you excited or mention journal entries, but here we get to the part relating to journal entries. So this part is specifically added in because the auditing standard requires this. So it will again pop up in the rest of the file where relevant, but what is important to you is that this is actually required by the auditing standard. So it's not optional, we have to do it in order to comply with the auditing standards. All right, so what are we required to do? We need to gain an understanding of the controls surrounding journal entries, including non-standard journal entries that are used to record non-recurring, unusual transactions or adjustments. So that understanding of the system, you can see there it says refer to 1150. Then test the appropriateness of journal entries that have been or are recorded in the general ledger and other adjustments made in preparation of the financial statements. That step will be in 1610 for the financial statement journal entries, and that's the one that we will also have a look at. And then lastly, based on your fraud risk assessment, consider the need to test additional journals throughout the period or journals with adjustments with specific characteristics. Then take into account that material, significant, and unusual journal entries and other non-standard journals are also tested in specific or in each section. So that's what we've documented, how we will respond to the risk of management override of controls. And then in this last bit, specifically relating to journal entries. All right, so this was our risk assessment document where we identified the risk, we assessed the risk, and we documented how we will respond to this risk. Right, now that was 1125 in the risk assessment stage. Let's then scroll down to the lead sheets and working papers and work programs. And under the section for general working papers, we will find work program 16.10, which is where we are going to find the procedures for auditing the journal entries. I have increased the size of my work program quite a lot because I want you to be able to see this procedure quite comfortably. All right, if you find that I'm staying quiet every now and again, it's just when I open these big documents and stuff, I just want to give it a chance to actually sync to you so that you don't experience too much of a disruption in the audio. Right, so this is a work program. It deals specifically with accounting records, and there are quite a number of procedures here that you need to perform, some of them specifically in terms of the Companies Act, making sure that the Companies Act related accounting records are there, shareholders register and those things. All right, so those are all there. What I want us to focus on is step 2 in this work program. Step 2 says make inquiries of individuals involved in the financial reporting process about inappropriate or unusual activity that related to the processing of journal entries and other adjustments. Okay, so that is where we will go and make specific inquiries about funnies for journal entries. Good. That was just the one thing. Then next up, I've included a working paper for you, 16.11, also in your Caseware file. Now remember again, normally you would have this working paper in every single section as we go along. So you wouldn't necessarily have all of the journal entries reflected in your general working paper section. Apologies, I seem to have the hiccups now. Oh, goodness. But we have for today's section or session included the journal working paper in the section for general working papers. So normally you will have a working paper similar to this one in each of the sections with the journal entries only relevant to that section. Right. Then this is the working paper. I've opened it up. If you haven't opened it up yet, you can do so because we are going to be working in this document somewhat. So it's quite a normal working paper that we've been used to for all the previous sessions as well. You'll see at the right top, Helen's already started the work, our senior. She's done work, she's signed it off. On the left-hand side, the client's, the auditor's name, the client's name, and so forth. And then these gray blocks, in the past, we would have put stuff here, but we haven't documented anything here. And the reason for that is quite simply because we're now busy with I almost want to say a combined or consolidated journal entries working paper, which you would normally have in a specific section, the operating expenses section, etc. So in here, in these gray blocks that we see in column E, that's where I would have referenced the materiality values back to the work program for this section, if it was operating expenses, etc. All right, so we haven't included references here. You would normally do that, but because we're not right now working towards a specific materiality section, that's why we don't have that. Good. Then the source, where did we get the journal entries from? We found them from the general ledger. Then our standard paragraph, ISA 500 paragraph 9, the completeness and accuracy of the schedule, from which we selected. That there we said the completeness and accuracy of the general ledger is tested in other areas of the audit. For example, in trade and other payables, the completeness of expenses has been tested through unrecorded liabilities testing. The general ledger has been reconciled to the lead schedule. Further accuracy testing is performed in the testing that we are going to do just now to check that the amounts are correct. All right. Then in terms of your objective, you will notice here that we've included 2 assertions, EO, occurrence, ADA, being the accuracy and the occurrence of the journal entries. That's what we want to test here. We want to make sure that the information is correct, accurate, and that the journal entries are all, let's call them valid journal entries, or that they did actually pertain to the business and therefore from an assertion perspective occurred. Now, the risk of material misstatement here I've marked as significant. This is not necessarily the significant risk of material misstatement from that section in the assertion level risk. This is rather significant because it is a fraud risk, and fraud risks are significant risks. Okay, so we're trying to address that overall fraud risk, significant risk of management override of controls. The population here, you might see there that I've documented journals in this section. You could also have a population perhaps being something like that journal listing. But in this case, it's quite fine to just say the journals in, let's say, our operating expenses section or any of those. We haven't sampled. Sampling is a specific selection method, so we didn't do any sample. We selected specific items, and so therefore the sampling size and method is not relevant. Reference to the audit work program. Which work program are you working in? Let's say that operating expenses, and in this case then the reference to the step in that work program. Yes, the step in that work program. Audit work performed, referencing to the specific steps, or if you desperately want to, you can also copy and paste those. All right, and then we are ready to start auditing the journal entries. You might see that I just, in getting ready for this morning's session, I added this little header to the example of testing, just for yourself to note, so that you know the columns B to H, the information in those columns are coming straight from the general ledger. So in case you look at this later on and think, where did this information come from? Right. So we've included 4 examples of journal entries that we're going to look at as part of our exercise, and the information from column B to H, these items come straight from the general ledger where we selected them, and the information will also then come documented from the general ledger, the description, the reference, etc. All right. I do notice that it's already 10 o'clock, so I think before we get started with the journal entries and start working in them, let's take a comfort break, and then when we come back we can jump straight into the little exercises, but at least we've done the prep work to set up for these items. So I'm going to, some of you may know already, we play a little video so that you can see when the break is over. So we'll break for 10 minutes, and you can just, if you wonder what time that's going to be, look at your own clock. In 10 minutes we'll start, or otherwise you can have a look at the video and you will know how much longer you have before you need to come back for the rest of the session. Right. Right, welcome back. I hope everybody enjoyed their quick tea break. I almost said lunch break, but we're not quite there yet. I know it's Friday, but we still have a full day. Right, so before the break, we discussed the working paper for our journal entry testing. And we were right at that point where we could then start with the testing or the consideration of all of the journal entries that have been selected. So I'm just going to move up a little bit so that we can actually see that better. And you will remember that I said the information we are showing here actually came from the, from the general ledger. All right, so the first one that we've got here is a journal debiting. Accounts payable is the account name. We will check the column just now to confirm that it is in fact accounts payable. Crediting, discount receive, and of course the VAT thing with that as well. Now note, this journal entry was processed on the 30th of April, which is our financial year end date. All right, the amounts are there, and the description in the general ledger says CPI 5% discount April 2023. And someone went to go and ask the client, and the client explained that the discount was claimed from the supplier for early settlement. Right, so that was done for us. Now we need to go and audit it. Now, one of the first things that we need to ask ourselves is whether this makes sense. So let's consider. If we had done early settlement, we would have paid a part of our account, and the client would have given us a portion, in this case 5% discount on our fee outstanding. So what do you expect to happen to, let's say, for example, the creditor's account? When we pay the creditor, we debit the creditor's account to make the balance outstanding less. So when we get a discount, we therefore have to pay them less. That discount that we process will also be making the balance outstanding less. In other words, will also be debiting the account. So the fact that the accounts payable or the specific debtor is debited, that makes sense to me. On the right-hand side, or the credit amount, discount received is then the part that goes with it. And if we think about the VAT is on the income side, or on the income statement account side, so also then a credit to the VAT control account. All right, so the debits and the credits make sense to me at this stage. We're going to go and check the mapping as well. And then we need to go and have a look at supporting documents. The client can't just tell me, oh, I get early settlement discount. So let's go and have a look at some supporting document. So in your folder with your material, you would have received not just the documentation and things like that, you would have also received or rather the Caseware file, you would have received a folder called supporting documents. Now I copied mine to my desktop just because some of these are so long that where I have them elsewhere, they won't open. So in case you are wondering why I'm in the desktop or notice that, it's just so that my documents will actually open up. Otherwise I've got a problem. All right, so what I see right at the top here is a document, CPI supplier statement. So let's open that up and have a look at what we see in CPI. Okay, I'm going to increase the size a little bit for us. What we see here is, first of all, the company or the supplier's name, Clear Print Inks, CPI. It is actually addressed, or it is the customer statement for our client, Wrap Up Manufacturing. The balance is on the 30th of April, or at least the statement. You can see the transactions go up to just before then. But what do we see? The client purchased, Wrap Up Manufacturing, purchased something from the supplier on the, what was that now, the 28th of March, an outstanding balance of 700,000. And then they made a payment on the 25th of April, which looks like they're short paying, but in actual fact, they knew that if they're paying within their terms, they will get the settlement discount. So there are two entries here on the 25th of March, the 25th of April, which is within 30 days of the balance, the payment, which is the short pay if you want, and then the settlement discount. Now, you might remember that in order for us to split the screens, I use the Windows button on my keyboard and I press right or left to make this one move to the one side. So I'm just going to move this to the right and then pick my journal entries to show that on the left hand side. Now I can probably just have a look at it a little bit better. Okay. So the amount, firstly, does the amount agree? I've got 35,674, 35,674.75. So the amount is then also what is reflected on the statement. But now, just because it's on the statement doesn't mean it is correct or appropriate, because the person that processed that could also make a mistake. So if we just scroll down a little bit on the statement, the terms of the agreement with the supplier is, well, quite conveniently reflected for us right there. So reminder, early payments receive a settlement discount of 5%. There we've got it confirmed. We also see that the terms of the transactions are that the balance should be paid within 30 days. So clearly the last sale was also done within 30 days from the 28th of March. And that then, if we were to go and calculate, and you can just open your calculator. Let me just open my calculator also. I could then very easily go and calculate if that 35,000 is in fact 5%. Okay, I like to just go anywhere on Excel and actually just use the functionality on Excel. If we use 713,494 and 96 cents, and we calculate if that is 5%, 5% there is exactly the 35,674. So literally I just took the amount from the statement, the total sales outstanding or the total sales amount, multiplied that by 5%, and that is exactly the amount. Okay, but we're not done with our calculations yet, because I'm not comfortable that we need to debit the accounts payable, and I'm comfortable with that amount. However, we still need to test the VAT split. So while I'm here on my working paper, I will simply take the amount that we've calculated just now and calculate what should be the VAT part. So remember, VAT in South Africa is 15%. So I will calculate 15 over 115, and that will give me 4,653 and 23 cents, which then is the same as the VAT amount. And I can check that my journal entry balances, or I could add them together and see that the 31,000 to discount received and the VAT of 4,600 does in fact make up, yeah, if I look at the bottom, or if you wanted to do a calculation, 35,000 674.75. So I've done a calculation. I then delete my calculations so that they don't stay on my working paper and look all weird and wonderful there. If you wanted to include your calculations on the working paper, you would have just included other columns. Okay. So yeah, we have now checked the numbers. We have checked that the amount is correctly calculated, and we've inspected the invoice. But now we need to go and document this. So first of all, we had those 3 steps. The first one was to say, confirm the rationale for the journal entry. I think we're all comfortable at this stage to say, yes, the rationale for having processed this journal entry in the first place makes sense. You might remember our little tick marks, like the one here, the little green tick mark. So what you will notice is that my font is Webdings. And if I then press a small a, then my little tick mark appears as a tick mark for yes, the rationale has been confirmed. Okay. What else do I need to document? Well, what evidence did I examine? And then lastly, whether the entry results in an appropriate measurement in terms of IFRS for SMEs. Okay. What evidence did we examine? And here I'm going to just document and say we inspected the, what is their name again? Clear print inks. I couldn't remember what the C is for. Clear print inks statement for 30 April 2023, which showed the early, oh goodness, early settlement discount provided. Right stuff. So now I've documented not just that I agree with the reason, I've also documented what I looked at. So anybody else can go and reperform what I've done. All right. Then lastly, we need to check whether this entry results in the appropriate measurement in terms of the financial reporting framework. And in our case now, IFRS for SME. So we need to see whether the mapping of these accounts payable, discount received, and VAT is appropriate. But we also need to consider whether the fact that they use those accounts are appropriate. So here you need to understand, what does CPI provide to us? So clear print inks, they provide the ink that we use in printing the packaging material, and so therefore this will ultimately become part of our cost of producing the inventory, and so then when we sell these items, it becomes part of our cost of sales. So I want us to go and have a look at our cost of sales lead schedule to see if the journal entry for discounts received, in other words, what made the cost of our inventories less, is in fact under the cost of sales section. Of course, for the accounts payable, we're going to go and check that that account 9,000 and 000 is in fact on the accounts payable or trade payable lead, and then for the VAT control to go check that that's also on an appropriate lead schedule. So let's go back to our Caseware file then. In the Caseware file in the document manager, we are now going to scroll quite far down to go and find sections. Now, sooner or later, you will become familiar with these, or you can go and look for. Remember, how do we look for? We say Control F, and for some reason, my phone appears on the wrong screen all the time. But let's say we're going to go to payables or something like that. I'm looking for payables, and it will take me to trade and other payables. Let's go and have a look at that lead schedule and see if we have something there that makes sense. So I'm trade and other payables. What am I seeing here? I'm seeing all kinds of other payables. I'm seeing wages payables. Right from the top, I am seeing the 9,000 account. You remember our 9,000 account, which is our account payable, right? So that is a credit balance because it's an amount owed. We debited that to make the amount owed less for that creditor. Just below that 9,500 is the VAT control account, and that is also an amount owed, which was then because initially when we incurred the cost of those items, it was in our production, so we had actually claimed the VAT back. Now we owe SARS that VAT back because we're not going to pay that VAT to the supplier anymore. They gave us the 35,000 discount, so the VAT on that is payable back to SARS again. So that is an amount payable. It credited to the control account. So we've covered 2 of the 3 accounts. The other item that I want to check then is possibly cost of sales. So again, I'll go and look for cost of sales, click next. There's my cost of sales section, section 720. If I open that lead up, now we are looking for, let me just help you to remember, we are looking for discount received account number 2700. So let's kind of have a look at our cost of sales lead and see if we've got that account. There we go. There it is. 2700 discount received, and that was a credit of 617,000. Great. So that's part of the cost of inventories. And we've confirmed the accounts payable as well as the VAT account. Fantastic. So now we go back to our working paper. We say we've confirmed the rationale, we've documented what we've examined, and yes, the entry does in fact result in the appropriate measurement of in terms of IFRS for SMEs. Okay, that was journal entry number 1. Number 2 is probably a journal entry that looks a little bit familiar for you. In our last session, we audited employee cost. Was it our last session? I can't remember. I think so. We audited employee cost and we had a look at leave pay and bonus provision. So that provision had journal entries put through, and we will see just now, but also so that I can tell you so long, this was the monthly provision, which if they all got accumulated, they then turned into an annual provision of 720,000. Right. So you can see this journal entry was done on the 31st of December 2022, still within our financial year. The 4,400 is a leave pay and bonus provision account. And the other one is provision. So which one's the balance sheet? Which one's the income statement? We'll see just now. But from the package that this client uses, I know that the lower numbers, the 4,400, for example, is the expenses in the income statement, and the 9,400 is more the liabilities in the balance sheet. Okay, so that's our expectation at this stage. What we also got from the general ledger is to say this is the monthly provision, December 2022. And when someone asked the client, I said, well, this is how they raise the provision for bonuses. Oops, I don't know if you saw that. There's a little typo there. Provision. Right. So what I want us to just bear in mind here is that if I'm auditing the journal entries, let's say I was on the provision side, the liability, you don't have to go and audit the liability as well if your colleague in your team had already audited employee cost. So we're going to pretend that another colleague of yours had actually audited employee cost, and you wanted to make sure before I now go and audit this as part of my revenue, as part of my trade and other payables or provisions, has that not maybe already been audited by my colleague when he or she audited employee cost? Then I'll just reference it to that working paper and I don't have to duplicate work that was already done. All right, so what I'm going to do is I'm going to email my colleague and ask him or her if it has been tested already. So let's go back to our supporting documents, and you will see there is an email that you have received, email regarding provision for bonuses that's been redacted. So here's an email that your colleague Brendan Hugh has sent you. You asked him if he had tested the provision for bonuses at year end. Brendan responded to you, trainee at Get Ahead. So hi trainee, that's yourself. Yes, I've tested the provision for bonuses at year end in the testing of employee costs. The working paper reference is 754. You're like, great, happiness, fantastic, let's move along. But please also remember that you just go and check. So we're going to go back to our Caseware file in the document manager, and I'm going to go and see operating expenses. This is where we test employee costs. Yes, there is the leave pay accrual and the working paper reference 754. But in this case today, we didn't provide you with a full actual working paper on that, There's just a placeholder for it, but that is going to be the number of the working paper. So we at least know that is the working paper. All right, so going back to the provisioning, we are ready to know, yes, it has been tested elsewhere. So then we don't need to test it ourselves. We can, I'm just going to actually merge these 3 cells into one and document one big reason or explanation to say provision for bonuses is tested in the employee costs section in total on working paper 754, and that's it. So you would have checked that that is part of it if you wanted to, but at least you know that the whole provision has been checked. So remember also, if they do monthly provisions, it's possible that this one was added and then next month there was a smaller or big amount. So we know that Brendan Hugh has tested the full provision. We don't have to go and test this one element that went in there. Good. That's the second one. The third one then has already been done for us, but let's still consider what was in there. Oh, you know what? I did forget to check. We didn't check the accounts. So let's just go and check those accounts, or at least let me show you those accounts so that you know for your own peace of mind. 4,400 and 9,400. So if we go to the trade and other payables, there we have provision for leave under the trade and other payables account. So that was the liability. And the 4,400 account, if I remember correctly, is also under cost of sales. 4,400 leave and bonus provision, that's the 006 account. Let's just double check because I didn't check the number. Yes, 006 and 020. So there we have 006, the leave and bonus provision of 720,000. That was then probably referenced to Brendan's working paper. So he must still come and include his little reference here. For the full balance that is tested, but the trade and other payables, the provision for leave outstanding at year end is obviously after I've paid the actual provision, so that's why the balance is not going to agree necessarily. That's the balance outstanding. Okay, fantastic. So we have dealt with the second one. What we see in the third one though, there is an amount of 5,983 Rand, and the explanation is correction of the MAR, so that's possibly March, of the March journal. And the reason there was the reversal of the incorrect amount passed for the provision for credit notes. So from this then, in March, they provided for credit notes, but that was wrong. And I can just also give you some additional information here that actually reversed the full correction or the full amount of the credit notes and then processed a new one. So there could be a difference here in terms of correcting journals. In some cases, they may just be reversing the full journal entry, and that's quite easy to see. Okay, there was a journal, same amount, and here we are literally just putting it in the opposite direction. So what was debit last time, we're crediting this time. You know, that is basically cancelling out any effect on the financial statements. However, there are also other scenarios, which is not today's scenario, but there are other scenarios where maybe they processed, let's say, 6,500 Rand as the provision for credit notes last time, and then they realized they made a mistake. It was actually a lot less or a lot more, and then they process a correction. So then you need to go and check that the difference in the amount is correct, but also that the debits and the credits are taking the result of those two journal entries in the right direction. Okay, so that our provision doesn't end up being even more when it should have been less, or the other way around. All right, so this is the reversal of, or the correction of that entry. And the person that did the testing for us confirmed the rationale. And what did he or she do? They inspected the general ledger account and agreed the journal to the original journal passed in March, like we said you should. The reversal is correct and a null effect on the accounting records. And so based on that, then we can also say the entry results in appropriate measurement in terms of IFRS for SMEs. Good. Next up then is the last journal entry for our test today, and that one is rates. Now, what is this rates? So the debiting the rates wrap-up manufacturing, again, you can see the account number there is quite low. Debiting the VAT control account, crediting accrued expenses. So not crediting a debtor, but accrued expenses. So the reason for that is we're providing for the rates for April because the invoice was not yet received. So what will we do here? Now, if I'm going to have a look again at my supporting documents, there is an extract of the rates account from the general ledger. So you go and you have a look at the rates, the general ledger account, and you see they're providing for rates. They said they didn't receive the invoice yet. So what we can see then here, other than the normal monthly journal entries for April, they made a provision, and the amount there, let me just show you the amount, is in fact then the 20,909 Rand. But what you might also notice is that this amount is exactly the same as the previous 10 amounts. Yes, the first two was slightly lower, but you obviously know everything goes up in price. So there was probably an annual increase, and that's normally around July. Makes sense there, it goes up in July. So we expect the April amount, if all of them are exactly the same, you can quite easily go and say, what was the invoice in the last time? Is it really that amount? And then quite easily do a provision for the same amount. This is because it is rates and taxes that tends to be the same from month to month, except if they do take into account the number of days in the month. But things like electricity, water usage, things like those, in their cases, you cannot just simply go and say, okay, what was last month's one? Let's assume it's the same. There you will rather go and you'll probably say, what was the average usage? So maybe say, let's sum all of, let's sum all of the ones from the previous months, divide it by 11 and see what was the average amount. And then go and say, okay, so that's probably a reasonable amount to provide for. That is, if it changed drastically from month to month, like, for example, electricity or water usage, things like that. But in the case of our rates, which stay consistent from month to month, it's not necessary to go and calculate an average. You can quite comfortably take the same amount from the last or the previous month's invoice. Right, but we're not going just from what's in the GL. We want to confirm it in a bit more detail. So what we are going to do in your supporting documents, you also have a document called rates invoice. Your client has given you everything you needed. How easy is that? I just want to go see, there we go, rates invoice. So this is the invoice that was sent to Wrap Up Manufacturing. So we are checking that we're getting the right stuff. This invoice was sent on the 1st of March, and it has an invoice rates and the amount 20,909.63 cents. That amount agrees. So I'm having a look at that amount. Also at the VAT element to that, and then of course the total expense. And who issued this invoice to us? That was Wrap Up Manufacturing. Do you see properties? Wrap Up Manufacturing properties. I'm starting to get a feeling that this might be a related party, but let's see. All right, but we clearly renting our building, not own our own building. So if the invoice was, for example, from the city of Johannesburg, whatever your municipality is, then that was an indication that this is actually paid directly to the municipality. And of course that we probably then owned the building. But chances are that we are renting from another, in this case, clearly a property company. And because the name is quite similar, that starts to make me a little bit, just a little bit suspicious. Okay. So what are we going to do in auditing this journal entry then? We've had a look at the amount. You can calculate that the VAT is calculated correctly like we did earlier, or we can just go from what was on the invoice, and we can go and document there that we confirmed the rationale, that we're comfortable with that. And we can say we inspected the March 2023 invoice for rates and agreed the amount paid monthly, and that is correct. We also inspected the GL account to ensure 12 expenses are accounted for during the year. Okay, So if you wanted to check that again, let me show you the extract. There are, we just select them like that. We can see there are 12 items, including this journal that we are auditing right now, checking that we've got the 12th one in there. So monthly expenses occur 12 in a year, and so it's quite nice then to see they didn't actually add a 13th expense in there by doing this provision. They just, almost want to call it, topped it up. They just made sure that there are 12 because we were still missing one. Okay, also here you can see the number of the account number 3670, wrap up manufacturing. But let's go and have a look at the actual Caseware file to check for these accounts. So in our, I think it's in operating expenses, probably we will have that. Operating expenses, 750. What did we have here? Let me, oh goodness, now I'm confusing myself. 3670. Count 32. Should be here somewhere. 3670 under municipal expenses. 3670, and there's the account. So the journal entry would have gone into that account. Okay, that makes sense. And you can go and check the accrual as well. Good. So that's the working paper for journal entries. Let's just see. Oh, I haven't completed the little cell about the rates and taxes. That's fine. It's part of the normal expenses. So the appropriate measurement in terms of IFRS for SME is correctly done. So good. No exceptions is our lead. With conclusion, we can just say the objective has been achieved. Objective of this working paper, of this procedure, which we had also marked right at the top, saying we are concerned over the possible significant misstatement from possibly manipulating the figures. And you can see there was nothing indicating any manipulation. We were just simply checking the journal entries to see whether there is supporting documentation for them, whether they made sense, etc. Okay, I want us to just quickly go back to the slides then. You can close all those documents, etc., that related to your journal entries. We are going to move on to the related party working papers now. So you can close all of them, and then we're going to move towards related parties. I'm also just quickly closing them, otherwise there are so many different things that's open on our side. So just making sure everybody has got the journal entries, working papers closed up and are ready for related parties then. Good. Right. So then related parties is our next section. And in terms of related parties, I think what's probably important for me here is that this is a section that is audited by everyone in your team. Related parties cannot only be audited by one person or two people. Yes, there'll be one person that signs off the working paper, but the gathering of the information you need as a team. Because I'm going to be auditing employee costs, and you're going to be auditing accounts payable, and that one's auditing this, and the other one audits operating expenses and comes across those rates with our Rapid Manufacturing Properties company. So there's different areas where you can come across related party transactions or even balances outstanding. But still, we work in exactly the same way. You're auditing the financials. Financials are supported by the trial balance, supported by the general ledger, supported by sub-ledgers. There's always source documents for any actions taken or any goods sold to a related party. All right, now those actions then, let's say, could be selling stock to those related parties. It could be even perhaps, yeah, there's a variety of options. We'll have a look at some of them just now. But what it makes related parties an important section for us, it is not so much because of the amounts that must be reflected in the balance sheet or the schedule of financial position. Those amounts have firstly already been audited in your property, plant and equipment, in all of the other sections. They've been audited, stock and accounts payable and you name. What makes the related party section important is that this is there's a standard, and we can look at that just now. It's a separate standard that requires specific or particular disclosure of related parties and transactions and balances with related parties in the financial statement. So we've got a separate section in the work programs where you need to go and document and consider related parties and the disclosure thereof. Okay, so the information is gathered throughout the audit by the whole team, and therefore we need to make sure that our communication in this regard is appropriate. All right, I want you to now use your chat function. It's your turn now to almost want to say to talk a bit, but just think about some scenarios that you may have come across, or maybe you were listening very carefully and you can give me some of those examples. But where do you think can we find related party transactions and balances in the client's accounting records or financial statements? Which of those line items in the financial statements do you think could possibly have related party transactions and balances? Okay, I see trade payables, yes. Expenses, loans, receivables, employee costs, fabulous, well done. Debtors, loans, expenses, trade receivables, yes, especially with if they are our customers. Cost of sales could be. Loans, accounts payable, like a creditor, for example, could be where our clients only purchase their stock from the holding company or from a related party. So definitely revenue, if we sell to them, inventory, oh yes, that's fantastic. We've got quite a few examples here. I'm quite chuffed with the employee costs because not everybody always thinks about employee costs where salaries or employee related benefits are paid to related parties, so individuals or the wife of the shareholder or the wife of the director or something like that could possibly also be a related party. So thank you. That's quite a long list. Loans, of course, shareholder loans. Someone else also mentioned the notes in the financial statements. Yes, that's where we disclose it, and we disclose it for all of those ones that we just mentioned. So thank you for your participation. Okay, so again, just to reiterate, the accounting framework requires specific disclosures of related party balances and transactions. For what it is important to remember is that this is specifically relating to disclosures, because the rest of the stuff is already disclosed or included or reported or recorded in other balances or financial statement line items already. You know, if you think about it, I've got another one that came in now. Thank you. Consultation fees. You know, they will be under expenses. They will be under different areas. But to highlight them to the user, to say these are transactions and balances specifically with related parties, we need to actually go and show them separately in the financial statements. Why the focus on this? Well, because sometimes these are on different terms, and we're going to see just now what the auditing standard also asks for. Before we move on though to the auditing part, accounting wise, your frameworks, IFRS and IFRS for SMEs, has specific definitions of what is considered to be a related party. Why do I say that? Don't confuse them with the related party notes, the related party definition in the Companies Act, in the IRBA Code of Conduct, if you want, in the tax legislation, any of those things. So there are lots of different definitions for related parties, and some of them are quite the same or very similar, but not necessarily exactly the same. So when we're disclosing related party transactions and account balances in terms of IFRS for SMEs, we need to make sure we're using the definition of IFRS for SMEs. Okay, then though, the standard says that if the auditing standard says that if you don't have a definition for related parties in the accounting framework that the client uses, let's say, for example, the client uses an entity basis of accounting, maybe it's a trust or something, and they're not complying with IFRS or IFRS for SME, then maybe their framework doesn't have a definition for related parties. Well, then you do have a definition in the auditing standard for related parties, but you can only apply that definition if the accounting framework does not have a definition. Right, so there we moved on to why is there such a focus on ISA 550, and really it is because in some instances or some circumstances there's really is an increased risk of material misstatement, not necessarily showing the wrong level of value of revenue or something like that, but actually just increased risk of not properly showing those things. Sometimes the systems don't account for these transactions separately or differently. So it's difficult for us to really know that we've got all of the related party, the individual parties, the individuals, if I can, or the companies or something, to really identify them. And some of you that have audited, have done a few audits by now, you would have seen that some of us actually have to, I almost want to say, we almost have to keep a little register of related parties. Yes, we can refer to previous years' related party notes, etc. But ideally, the client should actually keep record of who are the related parties and what transactions do they have with them and what balances do they have outstanding with them. But they don't necessarily account for them separately or differently or make it easy for us to identify those. Some of the transactions or the structures of the businesses can be quite complex. You can imagine or just maybe think about some recent corporate failures that we've had where the structures were very complex, lots of related party transactions, and it was quite easy to then manipulate the figures. Why? Because the transactions were not on commercial terms. Okay. Now, just to pause with commercial terms, we do not have to audit to confirm if or that every related party transaction is on commercial terms or is not on commercial terms. What we have to do is if the client chooses to disclose in the financials that this transaction is at commercial terms, then we have to audit that it in fact is on commercial terms. Okay. So if the client doesn't make any statement on the financials about arm's length or commercial terms, we don't have to audit it as such, but we need to do it if they do make that statement. And then, well, it's very easy to perpetrate fraud through related parties, and therefore we will go and consider some transactions. And we're very soon going to talk a little bit more about what do we consider to be a fraud risk in terms of related parties. So the financial statement user should be able to understand the effect of the transactions and the relationships of the client, of the business with other related parties through the financial statement. So if there were more sales or if there was a significant or a material sale with that person, the financial statement user should be able to identify those so that they can almost want to say ask their own questions if their questions aren't already answered in the financials, right? If we identify any related party transactions or balances that is not already known to us, and there's a part in the planning section where we actually ask the client, who are your related parties? If they don't tell us about any or some or even just one of the related parties, and we find it out a little bit later on, then there are very specific procedures we need to do to go and consider why we were not told of this related party. Now, I'm not saying it's because there's more immediately fraud or someone lied to you or any of that. It's just that we need to confirm whether there was any intention to misinform you or to actually hide this related party relationship. Not necessarily, but the standard says you need to go and just check up on that. Just go and find out if that is an issue or the issue. All right. So when is a related party transaction a significant risk And remember, with significant, that means we need special audit considerations, specific audit procedures. And this is then often not necessarily because of a fraud risk, but the requirement is also very highly linked to a fraud risk, but specifically a presumed significant risk. Well, you look at the related party definition, in our case, in the accounting framework. The first question you ask yourself is this a related party? This transaction, was the transaction done with a related party? Or let's put it otherwise, are there any transactions that this client had with related parties during the year? With wrap-up, yes, they rented their factory building from the wrap-up properties company. I can almost bet you that is going to be a related party. All right, so are there any related party transactions? Next up, we consider if those transactions are material in nature or in volume or in any other way significant. So are the related party transactions significant? Okay, so not just material, but significant also in volume or another way. So we've said, yes, there are related parties. Yes, there are transactions to those related parties. In fact, there's probably always related parties. So that's almost not the point. The point is, are there related party transactions? Are those transactions significant? And then, are those significant related party transactions outside the ordinary course of business? So in other words, if I buy all of the inventory that I sell from my holding company, there is a transaction, or there are lots of transactions with related parties, that is probably significant because I'm buying all of my raw materials from them. But is that outside the normal course of business? No, that is my business, to buy the plastic and to then manufacture the wrapping products to be able to sell it to my clients. That is part of my business. But if I had also bought, and here you must bear with me, I don't know why my example is always a Ferrari, but if I had also bought a Ferrari from the holding company, that is a related party transaction. It's significant because why does the business need a Ferrari? It's not like our packaging material is going to fit into the boot or anything like that. I bought a Ferrari from the holding company, and maybe I even then sold it on to one of our customers, something like that. Okay, that's outside the normal course of business. That is not what we do. We buy the plastic from a holding company, manufacture the wrapping products, and then sell it to our customers. Or maybe my son, I'm the owner or the owner manager, and my son buys the Ferrari from the business. That's also not necessarily part of the ordinary course of business. So in those cases, when I've got related party transactions, significant transactions outside the normal course of business, those three yellow blocks, then I've got a significant risk. And then there are compulsory responses, compulsory things that I need to go and do in order to test related party transactions and the disclosure thereof in the financial statements. All right, so these are in terms of the auditing standard, ISO 550, the screenshot on the slide on the left-hand side. I just want to point out that when we then have the significant risk, there are compulsory procedures to perform. So for significant related party transactions outside the normal course of business, we must inspect the underlying contracts or agreements and evaluate whether the business rationale, or maybe the lack thereof, if there isn't any, of the transaction suggests that maybe this was entered to engage in fraudulent financial reporting, or another way of fraud, concealing misappropriation of assets. Then we must also consider whether the terms of the transactions are consistent with management's explanation. So they can't say, oh no, this is a long-term loan and we don't have to worry, nothing's going to happen or anything like that. And then we see that actually this thing doesn't have any terms of agreement, terms of the transaction, and actually this loan, it could be repayable at any point in time. Then those two, the management's explanation and the terms of the transaction is not consistent, and that could also be indicating that maybe there's something, let's call it dodgy, going on for the moment. Then the transactions have been appropriately accounted for and disclosed in accordance with the applicable financial reporting framework. Because if we are not disclosing it in the way that the framework requires, well, why? Why? Big, big, big question mark. And then we obtain audit evidence that the transactions have been appropriately imported, authorized, and approved. In other words, did those charged with governance, did the big shots also approve this? Or was it perhaps someone else that just tried to do this? I just want to quickly have a look. I see there's a question coming through. If the client does not state that the transactions are at arm's length, do we have any professional obligation, for example, NOCLAR, to still do tests? For example, if the transactions affect VAT or income tax in some way? That's a good question. So VAT, income tax, you will still consider the impact of this transaction on the VAT, whether it complies with the VAT requirements, whether it complies with income tax, and then consider possible NOCLAR and whatever else in terms of that legislation. But if a client has just not accounted for this item at arm's length as such, that does not necessarily mean that there's non-compliance. So I know that's not really a full response, but yes, you will consider compliance with those, let's say the income tax and the VAT and all of that. So those are laws and regulations that we are testing. So that's a whole separate auditing standard. We will always check that the client is compliant with those, I want to call them for now, significant or important laws. We will always check that the client is complying with the Companies Act, with income tax, with VAT. But just because the transaction is not at arm's length does not mean that there is something that is not compliant. Okay. So yes, of course, if it is that I'm selling my building to the related party for 50% of what it's worth, yes, of course, then there's going to be tax consequences and all those things. We're going to consider that. But you know, in reality, I can sell my building for whatever I want to my related party. I can sell it to anyone for whatever I want. The question is whether there will be tax consequences, and that's I want to say a related issue or a separate issue, but not the main issue necessarily. Okay. I think any person would probably see then in that 1 year where we had maybe sold a building of, I don't know, 50 million and we sold it for 20 million, then the accounting or the financial reporting statements will also show that we had to write off a significant amount, and hopefully someone will see that and connect the dots and ask the questions. Okay. Good. Next, what do we need to do to audit related parties? So firstly, always keep related parties in mind when auditing your section, and communicate related party transactions or balances to the team member that is responsible for the related party section, or when these transactions are identified, communicate those. Then next, this first bullet is most important, applies to every single person. Further, if you do identify transactions outside of the ordinary course of business, you or the person then who is responsible for the related party section will test perform the tests that are required, and also inform the team of what was tested, and maybe even to the degree to which that will affect their sections. Okay. Then you will agree the disclosures to the accounting records. So we will check what is in the financials and make sure that that is supported by the accounting records. And then if the financial statements state that it is with the transactions with related parties are at arm's length, of course, then we're going to test whether that is in fact the case. Next up, we're going to do the test, the actual exercise for us. But before we jump into that, I'd see it is already again taken time for us for a little comfort break. So we're going to break for 10 minutes. When we come back, we are going to be back in our Caseware file, busy with our exercise. But let's first just go and stretch our legs, take a comfort break, and then we will start again in 10 minutes. I will play the video again because that's just easy for us to see when the 10 minutes are up and we need to start again. Enjoy your break. Right, welcome back to our session and the last bit of our session. Right, so before the break, we were busy with related parties and we talked about the theory around that. Now we are going to talk about or look at the exercise. So in our related parties working paper, it's already been prepared. We are going to agree the values which appear not to be tested to the relevant lead sheet and see what is on there. So in your Caseware file, okay, not in the operating expenses lead, in your document manager, right at the bottom, well, very far to the bottom, you get a section called other disclosures. So that's after your equity and your income statement and all those items, you get other disclosures. And one of the first sections in other disclosures is related parties. So there you have your work program. And also you can just have a look at this so long. 851 is the related party working paper that we will be looking at. Okay, so let's open the related parties work program and have a look at that. Good. What is on this work program? So the risk assessment sections are there coming through. There is one little risk there to say that, let me show it to you properly. One little risk that says all related party transactions may not be disclosed. PD is our assertion for the risk that was selected. So the procedures that will appear for related parties in our work program all relate to the PD assertion. All right. I almost want to call them the generic procedures. The first procedure says, for all procedures that require a selection of items for testing, document how the completeness and accuracy of the population from which the items were selected were verified. And that's on the work program, or working paper rather. There, Helen, when she prepared the working paper, included the reference for us already. We'll go and have a look at that working paper just now. Secondly, inspect the minutes of board meetings to determine whether the directors disclose to the board of directors the personal financial interest held by themselves or by a related person in respect of transactions. So all just generic things. No decisions taken in meetings. So someone obviously had the honor of working through all of those minutes, reading them all, maybe making a summary and checking if there is anything relating to related parties. And then step 3, determine whether the procedures to identify previously unknown related parties, relationships and balances were performed in 1810. So in work program 1810, there will be a step to say, have you identified any, I want to say new, but newly identified related party relationships and balances, in other words, ones you didn't know of before. If not, perform a completeness check on 1810. So if you haven't done that step yet, go and do that step. Great stuff. That was done on 1810. Then we get to the step about what we need to do if and when those new items are identified that we didn't know of before. So when previously identified or undisclosed related parties are identified, and then those 3 steps. You might remember on the slides we said there are specific requirements of things you need to do if you do come across them, right? We already know that we had not identified any previously unidentified or undisclosed related parties, so we merely document that and move along. Then we get to step 5. This is the step where we are going to do some work. Step 5 says select material transactions with related parties and, firstly, follow those through to the accounting records and supporting documentation to ensure the transactions are fairly presented in the financial statements. That's done on 851. We're going to look at that. Secondly, obtain evidence to confirm the validity of any assertion in the financial statements to the effect that the related party transaction was conducted on terms equivalent to those prevailing at an arm's length. None of those statements are made in the financials, so we simply say no disclosure, blah, 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 blah. And then lastly, C, ensure that significant related party transactions that are outside the normal course of business are dealt with as significant risks. Evaluate the business rationale and all those requirements as we had seen on the slide earlier. I want to almost say, thankfully, we hadn't identified any of those, so we are saving a bit of time in our audit No transactions outside the normal course of business were identified throughout the audit or in this section. Okay, so that of course can also only really be concluded on once the audit has been completed. And then lastly, select material balances owing to and from related parties, and then go and get evidence about recoverability and those things. Then some steps about the actual presentation and disclosure in the financials. And you will notice that that section which I said this morning when we started with journal entries, that part with the procedures on journal entries, that section is not in the related party work program, because this section is merely checking additional disclosure of items that are already in other sections or other work programs. So you would have tested any journal entries in these account balances and transactions in the relevant sections already. So it's not necessary to come and do that for related parties as well. All right, so we're going to go to 851. You can either use the hyperlink from our work program, or you could go back to your work document manager in Caseware and double click on 851 to open the work paper for related parties. Good. So if we just go to the very, very top, we can see there the document number is in fact 851. We can see that this is Fletcher Inc., our work program, working papers. We can see the materiality numbers. They've all been linked back to the relevant work program, 850.10. And then the source is also the general ledger and the supplier ledger, because we've got some suppliers. How has the completeness and accuracy been tested? Well, there we will say refer to the general ledger and supplier accounts that's been verified through testing performed in trade and other sections. Good. We are concerned or focused on testing the presentation and disclosure assertion, and the risk there is medium. Again, reference back to the work program. We haven't done any samplings. So no population, sampling method, size, etc. Work program, procedure 5. That's what we're going to be doing or looking at. All right, so the content of this working paper then is firstly a list of related parties identified and agreed to the related parties identified at the planning stage. So the directors per this working paper is Emily Harper, Kathy Fitz, Larry Attic, and Stefan Harper. And then we also have a close family member of one of the directors, Larry Attic. I don't know, maybe his wife or his mother or someone, is Susan Attic. We also know of a company or two companies controlled by the directors, Wrap Up Manufacturing Properties. Remember, I talked about this one earlier. And then Plastic Friends Pty Limited as well. And then lastly, the shareholder with controlling interest being the Larry Attic Trust. Right, so that's all very interesting. Now, on the testing performed by this trainee that's already done the work, he or she had performed the testing throughout the file, inspected the minutes of meetings that we saw earlier on, and the director's disclosures obtained from CIPC. So these are actual reports that you get from CIPC to say, tell me all the entities that this person is a director of, and then you'll get it per identity number, and this person's everything that he or she is then a director of will be disclosed on that report, right? And then to say we haven't identified any additional related parties having performed all of those procedures. All right, now just to check for yourself if you have identified or included all of the related parties identified at the planning stage, let's go and have a look at our supporting documents again. You will see there is a list of related parties, and if we open that, this gives us a list of related parties that were mentioned at the planning meeting. So from the planning meeting minutes, the team was told these are the following related parties. So we can just have a look if they're all there. We see there Wrap Up Manufacturing controlled by the director Plastics, Plastic Friends, and then the 4 directors, Susan Attic being the close family, and the Larry Attic Trust being a majority shareholder. Okay, so we've got all of them. No one's been left out, and there's no new ones either. Good. Then in terms of the balances and the transactions, so maybe just to also let you know that or to remind you that in terms of IFRS for SME, the entity is required to disclose the subsidiaries and the holding companies' relationships in the financials. But then in terms of other related party relationships, only to disclose the related parties where there were transactions during the year or balances outstanding. So it's quite possible that maybe some of the related parties may not necessarily be disclosed when the financials are prepared in terms of IFRS for SME. But let's have a look at the detail in this working paper. All right, so first of all, you can also go back to last year's working paper, obviously see what was done there, who were those related parties. So if you don't just want to rely on what the client tells you, you can also, of course, go to last year's stuff. So we've included here, firstly, the balances, and then a little bit later on, the transactions with related parties. So balances outstanding in the trade payables is Plastic Friends Pty Limited. Now, if we just have a look at the legend that was used, APA, at the bottom says agree to the payables age analysis. So Plastic Friends is one of the creditors at year end then, if you want. Okay, that's the balance at year end, and then also the prior year balance. Now, the column G is done right at the end when you have basically the final financials or the draft financials, because you can only really go and confirm or sign off on the working paper to say this is what's in the financials once you actually have the financials. So from the trial balance, we can complete column C and E, but we can really only conclude after having completed column G once we have real financials. Okay. Of course, it would be fabulous if our client does give us financials when we start the audit, but we also know that realistically they don't always have a draft available when we do the audit. Good. Differences of a few cents on the right-hand side is really not concerning to me. Why? Well, because the financial statements are drafted in rands. So if there are a few cents, it's obviously rounding up or rounding down to get to the actual rands that had to be disclosed in the financials. Then next is the loans receivable or payable to and from related parties. And this year, for those two yellow blocks, is where we're going to go and have a look as to whether these numbers are in fact correct according to our accounting records. So there was a loan, and note it has brackets around, so it was payable to S. Harper in the prior year. According to the trial balance, it is payable by her, so in other words, it's now a loan receivable from S. Harper in the current year. And we also have the Larry Attic Trust with no balance this year, where before it was actually an amount payable to Larry Attic Trust in the prior year. And then this person had written, referred to section 348 for testing of the loan terms, and adequate reference made to the loan note in the related party notes in the draft AFS. Now, some firms prefer to really include all the disclosure and all the requirements and things in the working paper, and that's also perfectly fine. There tends to be a risk of possibly duplicating a little bit. So if you choose to just refer this here and say, I have done it, because the important thing is you must go and check the terms of these loans payable to and from, and you must make sure that those terms are appropriately disclosed in the financials. So that's the important part. If you want to include it in here, that is fabulous, but otherwise, if you want to refer it somewhere else, that's also good. You have to just make sure that you have checked it, at least. All right, so let's go and have a look then at loans payable and loans receivable and see if we can find the balance for S. Harper and see if really there is no balance for the Larry Attic Trust at the end of 2023. So if I go back to my Caseware file, we spoke about amounts payable to and amounts payable from, but I don't really expect them to be on the trade and other payables, the normal things, because these are related parties. So I'd rather want to go and have a look. If I look at the related party balances, I mean, there is a balance, S. Harper. Okay, that's been mapped there. And then if I look at these other two accounts, the one has a negative or the payable amount in the prior year, both of those, but nothing in the current year. So if I then go and I say, well, there we go, lead on the right hand side, Loan account payable by S. Harper, 134 rather, 325.56. That has been mapped to a shareholder or a amount payable by a stakeholder is the word I'm looking for. So that balance is definitely payable, and we can actually refer it, well, you can to the lead schedule of 850, but we also want to go to the section where it was actually audited. So we will go and have a look at that just now. You can also see the other balances. But if we go back to the loans from stakeholders and the loans to stakeholders, let's have a look at those. Now, if I know that those will be under the, in my mind, the balance sheet section. So I'm going to go scroll up to the non-current assets, and then go and look here for a section, loans to stakeholders. Stakeholders being the shareholders and other stakeholders in the business. If I then open up that lead schedule, that is 348. There I can see loans to stakeholders S. Harper. And I can then go and reference that amount, not so much from the lead schedule, from the related party lead schedule, which doesn't really tell me much, but it would have been audited in detail here on the lead schedule loans to stakeholders, lead number 348. So then I'll simply write here, let me maybe also just make it like that, then we can all see it. I will write 348 there, then everyone can see where that amount has been audited. Okay, maybe just move it there to the left as well. I don't see a balance here for this Larry Attic Trust, which is also a loan, well, receivable payable to or from the related parties, but our schedule also shows that it really is of no value. So I'm not going to include a reference yet on the lead schedule loans to stakeholders now back to our working paper 851, but that's what you actually also should be doing. And then loans from stakeholders, that's 548. Where did I find that? Well, if I went past the current assets, went to the non-current liabilities, I would have found 548 being loans from stakeholders and the lead schedule there, 548. What I see on this lead schedule is then the prior year balance for S. Harper's loan, which agrees to what we have on the working paper, and I see the prior balance for Larry Attic Trust. Does this mean I can just assume and be happy that the balance was paid off? Well, I can reference this to the lead schedule 548. I can do that. But I would want to still do more to confirm that this is in fact a zero balance. So what I would probably do is to go and speak to the person that audited this loans from stakeholders, which is probably one of my colleagues, and say, can you confirm that this loan account was in fact paid off after year end? And the person would say, yes, I've done it on this working paper, or I haven't actually thought about it, or whatever the case is. But between yourself as a team, you need to go and confirm that in fact there is no balance payable to this trust anymore, and also that it didn't actually just reverse and now it's payable from. Okay, good. So that's what we needed to do in terms of those 2 points. Then if we just have a look at the transactions, there was a rent expense paid to wrap up manufacturing properties. Now you'll remember we had those rates and taxes, eh? But here we can also see that the rent that we paid is also included there. And the person has already agreed it to the general ledger and the prior financials. Let's look at this interest paid. So this person has confirmed that to the lead schedule there was no interest paid this year. Yet last year there was 79,000 worth of interest paid. Does that make sense? Well, the loan was quite big at outstanding last year, and we want to believe that it has been paid off, or let's say we've confirmed it's been paid off. My assumption would be that it was probably paid off quite soon in the new year. But again, you'd want to go check, when did this guy actually pay it back? Was it early in May 2022? That would be my expectation, because there was not even any time for any interest to accrue. If the interest did accrue because it took him a month or two to pay back, well, then there would be a problem. Eh? But remember, the interest paid has already been audited, or probably been audited already, and the balance in the lead schedule is zero. Okay. Next then is repairs and maintenance paid or received if it's in credit. So what we've got here is an amount paid back by wrap-up manufacturing properties. Smallish amount, but that was where we were reimbursed for for repairs and maintenance that we paid, but because it's not our own building, we then claimed it back from the landlord, being wrap-up manufacturing properties. You can also see that there's no amount in the prior, and someone actually went ahead and said, let's just double check this for clarity's sake, and we made a note there to say, yes, there really was nothing in the prior. Okay. And then salaries and wages, that's Susan Attic. That's where we had that comment earlier on where I said, where can we all find related party items? And we had a few bright sparks there where you also remember that, yes, there can also be people earning salaries and wages, and that could be related party transactions. APR being agreeing to the payroll report, both the current and the prior, maybe last year's one you did to last year's working paper or last year's financial statements, something like that. And then don't forget the key management personnel compensation, which is a requirement in terms of IFRS for SMEs, but also in terms of the Companies Act requirements for directors' remuneration. So you've been referred to the working paper 7 or to the section 750, where the directors' remuneration testing took place. Good. So that is your related parties working paper, just to document then and consider that we've got all of the related party transactions, balances, and relationships included. Thankfully for this scenario, we didn't have any new ones that the client didn't tell us about, and we also didn't have any significant related party transactions outside the normal course of business. Right, I'm moving ahead. Then we are going to look, let me just close this lead schedule also. We've dealt with the related party working paper, and we are then moving ahead with other income. All right, so that's our third topic for today. It's not a very lengthy one, but it is something that I still want us to consider carefully. So again, other income can be disclosed in the financial statements, but we'll always have some action that went ahead of that led to source documents that ultimately ended up as being accounted for. An example of that could then be something like an insurance claim. So let's say one of our machines broke, we had to replace it. We will then have an insurance claim where that money will be paid back. These are not always material and may not always be tested, but note that where you do have other income that is material, that you especially consider classification. You can't just set off that item against the expense or something like that we had. Always considering accounting framework requirements. And in the case of other income, that talks about the nature of items, which then determines the classification. Income definition includes both revenue and gains, and we need to consider which one it is when we have these other types of incomes. Let's say, for example, a grant received or a refund from the SETA that our staff or that we belong to, the sector education training authorities, where we pay portions of taxes to, but if we do train our staff, we can actually claim back. So we get refunds. Now, where do we reflect that? As other income or revenue, or do we put it off against the salaries? I don't know. Where do we put that? We need to consider that. So revenue is an income in the ordinary activities, but so you can then see that a grant or a SETA refund or something like that, even an insurance claim, cannot possibly be revenue. Okay, I say grants now, sorry. In some cases, grants can be your main source of income, especially in a non-profit company, but funds from insurance cannot be your definitely your revenue. So gains are then all the other items which aren't revenue. I've mentioned classification, especially important then in terms of which line item it goes to. We need to do testing to supporting documentation. Now, the supporting documentation depends on the nature of the actual thing. So the insurance proceeds will be agreed to the claim documentation. The SETA refund will be agreed to the claim documentation, things like that. So we need to remember to do the testing, and our procedures need to be adjusted according to the risk, the reason for the risk, and of course, according to how material these items are. The principles, how will we go about testing the other items? We will have the same principles as we have applied throughout all of these sessions. Prepare the working paper with the headings, with everything in there, perform the steps as it is reflected on the work program after you have tailored it for the risk or the assertion that you've selected for testing. And also maybe if the procedure is have now switched off all of my sound. It does tell me that there may be some poor quality, but I'm not using any other products. Yeah, it's really very strange as to why I'm experiencing this sound issue. Oh, there Masilu says it's back. You can hear me again. How good is that? Eh? So for the few of you that are still here, thank you very much for being so patient. Sure, I don't know what happened there, but I've unmuted and muted myself about 100 times now. I switched a slide and suddenly you couldn't hear me. So just as a reminder, if you want to still submit the question or the slide for saying, let's just see, to tell me maybe for a prize, because some people have tried but have not yet gotten the right answer. So I'm going to just quickly show that slide again if you would like to try for the prize. Hang on. If you want to try and submit a response, the answer is in your slide somewhere, so I'm not going to hold on for 100 hours now, but if you want to go and check when do we record, or what are the 3 blocks that need to be ticked for us to say there is a presumed significant risk for related parties. If you can submit that, then you are able to win a prize, which, if I remember correctly, is a Takealot voucher. I see some nice things coming in now. And then also just on the slide, I did show you the points that are coming in that we are still going to do, the sessions, the topics. Hang on, let me just navigate properly. There's the next sessions, okay? Next sessions there, the 24th of May. Oh, now I click and then I go. The 24th of May, the 7th of June is our probe audit sessions. The other ones that are in red or coral are the other financial statements ones. So I'm looking forward to still seeing you for a few more sessions, or if you want to join the financial statement ones. If you have any other questions, you can also submit them, but I can definitely see that there are a few people who are submitting responses. I see Klaus wants to see who or hear who was the winner. Let me just see, because when I looked at the others, I hadn't yet identified a response. There. Okay, even that one wasn't right. So sorry. So that one is one new one that comes in. Yeah, I actually don't think that we've got one that is right yet, but I don't see anyone that is right, but some of them are really close. So let me show you the right one, and then I will go and choose one from the responses when we are offline, but I don't see one that is 100% correct. So the response is, we will assume or presume the significant fraud is when there are related party transactions. Okay, so there's got to be transactions with that related party. If those transactions are significant, and then when those significant related party transactions are outside the ordinary course of business. I will carefully go through the responses. So if there is someone that did get it correct and I missed that, then I will give that the prize to that person. But I did not see any specific person that had it like that. Well, I did see very interesting ones which are very close by. Even someone said estimation uncertainty, which was an interesting one, but not exactly. So I'll go and have a look at that, and then that person will get the prize. So thank you very much. We have another 4 minutes. So now I just want to also say, please will you complete the form. I know Masilu has shared that form, but if you will please complete the form, or the office form online as the course evaluation, that would be really fantastic for us to just get feedback also on today's session, also for future to see how and where we can change this. I know one thing is obviously don't lose your sound halfway through, but I'll have to go and do a root cause analysis to determine what happened there. Okay, I see also that Simon is asking for the form. I'm resharing that form in the chat and question box. So just have a look at that. It just says HTTPS forms office and then a code. So that is that code. If you follow it, you will be taken to a page. I'm just going to show you the default one, the blank one that just says do the feedback. Oh, here's the survey. Please complete that survey. Right. So that's the one that I would really appreciate if you can complete that. Otherwise, I hope you have a fantastic rest of the Friday. And I'm already looking forward to seeing you in our next session, being the 24th of May. It's going to be quite a bit of a time now, but we've got lots of public holidays coming up again. And of course, I know this is busy season. So we tried to do the majority of the stuff in Feb and March before you got too busy. And then I will have a chat to you again on the 24th of May, and we will finish off on the 7th of June. All right. Have a fantastic Friday. Thank you for your participation. Thank you for your input. And yeah, I will chat to you again on the 24th of May. Goodbye.